Hi guys, I'm sure you've heard interest rates have hit an all-time low. All-time low. So it's a historic moment. And what does this mean to you? Basically, this will impact everyone, regardless if you're a renter, buyer, owner, investor. This will impact you, and hopefully in a positive way. If you're a renter, you now have more buying power or more affordability. And so when you look at the buy versus rent chart, it's probably a lot different than what was presented in the past, should you have seen it. And again, the benefits to home ownership is that there's a lot of savings, tax savings, and you're locked in for 30 years. Rent's skyrocketing right now, and your payment basically will stay the same for 30 years should you become a homeowner. The second part of it is that the main part of your payment is principal, and really what you're doing is a lot of the payment is going back into your house, creating equity. So kind of like somewhat of a savings account in the equity of your home versus paying rent to someone else. So you're building your equity, you're paying yourself back in your payments. Big deal. And again, with all-time low interest rates, you could be in the 3 percentile somewhere, which is unheard of. I mean, we've hit the high 3 mark, mid 3 mark before, but not as low as today. So you can take advantage of that. There's also loan programs right now that basically cover your down payment and potentially your closing costs as well. So you can get in with basically no money down. If you're VA, for sure, no money down. And you're in a home at the lowest interest rate possible. So it's a very exciting time for anyone who doesn't own and want to become a homeowner. As far as buyers, if you're shopping right now, it's couldn't be a better time as far as like affordability and interest rates. So, you know, if you're shopping, what you were looking at yesterday, your payments have just lowered based on the same price. The other thing is that if you're comfortable with the price you were shopping at, as far as like mortgage payment, you can now actually up the price with the same payment that you were comfortable with a couple days ago. So you can buy more house, maybe 5,000 more, 10,000 more, 15,000 more, and still have the same payment you were shopping at a few days ago. So it's a big deal to us buyers. And then second of all, if you're a buyer and you're already in a transaction, say you're buying a brand new home or you're in escrow, it might be a good idea to talk to your lender and lock in your interest rate, because basically you get the best of both worlds. You'll lock into today's lowest rate, and should it dip any more, you get that benefit. But it does give you a ceiling that your interest rate will be locked at today's low rate. But again, if it goes lower, you get that benefit. So it's a big deal to lock it. If you're buying a brand new home and you have 6 more months to build, 5 more months to build, talk to your lender. Most lenders charge to lock your rate that far in advance. So what you can do is an analysis. If you lock it today, how much is it going to cost? What's the potential of the interest rate getting even lower than today? And a good lender should be able to advise you if that's a good idea or not. But you know, in the I don't want to say in the near future, but in the future, interest rates have nowhere but to go up. It's just a matter of how long will it take to get there. As far as owners, this benefits you as well, because you can now do a refinance. A lot of us were happy with 6% interest rates, 5% interest rates, 4.5% interest rates. Talk to your lender today, because you probably could shave off a point or two, and that's a big deal. You know, you're looking at an amortization schedule over 30 years. That could save you thousands to hundreds of thousands of dollars over that time. So it's a good idea to look at that. Another way to take advantage of this situation with the low interest rates is, if you're an owner, you can also talk to a lender about cash out refinance, and you can basically consolidate debt. And you can take away some of your bad debt, which might be credit cards or anything higher than the interest rate today, which is, you could get down to the 3s again. You can consolidate your car loan, your student debt, your credit cards, your pool loan, or anything that you have against you with higher interest rates. you can basically consolidate that, get that paid off with your home equity, and lock it all in at again, this very low interest rate. So I know people who have now wrapped a lot of their debt into their equity of their home, and because the interest rates are so low, their monthly payment haven't changed, but now all of the debt that they wrapped into it are again at this low interest rate. And when you're looking at it from a reviews perspective on your credit, a mortgage is considered good debt, so you're in a better buying situation as well, should you be looking at other things or want to leverage your credit. Investors, I've seen investors come in as low as the high threes, and that's unheard of. Investment loans are usually a point higher than owner-occupant loans, and so right now as an investor, your buying power went up, and your cash flow, your return on investment on cash flow numbers will really change. And so we can hit the numbers that we couldn't hit a few days ago. Again, if you save a half point, a point from where we were, that's a half point to a point more on your return on investment, or potentially more than that based on how much you're leveraging. So it's really, I mean, I use the word exciting all the time. It gets a little generic, but I am excited about all of this because it presents opportunity. The other thing you can do as an investor is that you can use like some of your properties or even your primary residence. You can do a cash out refinance and buy investment property with potentially that monies, or you could pull out an equity line of credit at a very minimal interest rate and start buying properties. And the theory a lot of the time is that equity lines of credit are created for short-term loans. So you take advantage of the low rate short-term, and then the theory is once you acquire an investment property, which you probably get a bit better deal on because equity lines are considered cash. So you buy these properties with your equity line or cash, and then you refinance back out into a conventional loan at the low interest rate as well. So there's a lot of strategies you can use as an investor. And again, just because of the low interest rates, there's opportunities that we didn't have a few days ago. I myself got to talk to my wife, but I'm looking at refinancing some of my real estate portfolio as well. What you can do, and this might be fun for some of you math people, is basically take 1% and figure out an equation on your price of your home or what you owe, and then figure out what 1% will save you over an amortized 30 years. I'm sure that number will startle you. So that's just a I guess tip of the week, and wanted to share with you because you should know about it. And if you want to know more, give us a call here at Expand Realty, or talk to your lender. Either one of us can probably answer your questions or at least steer you in the right direction. So again, Randy Hatada, Expand Realty, expanding your horizons. Thank you. Have a great day.